Okay, welcome to part 6. On part 5, I went over the meanings and the definitions of the things that you'll find on the report, the symbols, the terminologies, things of that nature. And that's here. You can find it under the section titled Symbols and Meanings. Okay. Now, I said I would go over some case studies, so I'm going to go over this report so I can give you an idea on how to read it, how to understand it. And I'm going to go over some charts. I will also go over some some trades, so that you can get an idea of how it all works. Okay, so excuse me, let's get right into it. Now, usually case studies are longer videos, so I did mention on the previous video that I would only try to make maybe 1 or 2 last videos, meaning the previous video is going to be the second to the last. So I'll try to stick to that. So I'll get right into this right now so I could get going. Okay, so when you look at this report, obviously you already know you're going to have different sections of this report. You got the Forex market, you have the commodities market, the cryptocurrency, and you also have the indices market. So you have all these markets. And then you're going to look at this, and hopefully you go over all of the videos so you can understand what's going on and understand how it works. Now, these methods are very, very powerful methods. You can use them long term. You can use them short term. They absolutely work. You're going to find that for yourself. There's a lot of other nuances associated with them, meaning that there are other factors that are involved. It's not like, I hate to make it sound easy. Let's just put it like that. Everything is not easy in life. So I don't want to make it sound like, oh, this is like the magic pill. But I mean, it's pretty amazing how this works. If you stick to it and you do the part that you're supposed to do as a wise investor, well, of course it's going to work. So it takes two. It takes two to tango, right? So you're going to have to work together with the strategy. You're going to have to be on the same page as we are. So in order for you to be on the same page, you're going to have to, utilize those techniques that we teach, patience. And, patience is the key here. Really, really, really is the key. I mean, there's a lot of other things too, but let's get right into it. I said I was going to get right into it, and I'm giving you guys, but it's important stuff I'm saying. So it's not anything to just gloss over. But let's look at the first symbol here. We got Australian dollar versus Canadian dollar. Now notice, if you look at the trends, okay, the trends, now this trend has been changing. Whenever you see something like this, where here, let's take a look at it. It's definitely aligned. So we see that it's making profit on the short term. So I'm going to show you some accounts. I can't really show you the identity of the accounts. I can't show you the amount of money on the accounts. We trade for different people, and just for legal reasons, we have to blur out some of the content. So just bear with me, but I will show you guys the understanding aspect of how everything works here. So here we have our first example, Australian dollar versus Canadian dollar. We have it going in a sell direction. This account has a considerable amount of money, and we're able to place 0.20 lot sizes and 0.10. We won't go any further with that, and per request. Now, if you notice this particular account, the trade has been going on for quite some time. Right now it is November 9th, okay, 2021. So we've been holding on to this since April. So this would be considered a current market value trade. So now if you notice on the report, it shows that that's a new trend. So that should tell you that oftentimes you'll have situations where you'll have up and down. You'll have up and downs take place. But overall, if you hold on to the current market value for what it's really worth, and that's the definition of current market value, is that it's giving you the actual value of that asset. Okay, but that's long term. If you hold on to it for what it's worth, you're going to go through the different cycles. There's different cycles of ups and downs. But overall, you'll hold on to it. So recently you can tell that there was a situation where it went in a buy direction. And there's also a situation here where you can see a lot of turbulence taking place. And a lot of the reasons for that is this, especially with the Canadian dollar. We have to remember Canadian dollar is directly associated to the U.S. oil production. So whenever you see prices in U.S. oil, whether it's high, whether it's low, it'll always affect the Canadian dollar. And that's one of the reasons why we saw the Australian dollar go up against the Canadian dollar, and it took quite a beating. That's because the Canadian dollar, which is associated with U.S. oil, all right, oil prices, U.S. oil prices have been going up considerably. So from April to November, sure enough, that's what happened. So there was no contest. So that's pretty much what's taking place here. You have one currency pitted against another currency, or one currency versus another currency. So the Australian dollar versus the Canadian dollar, you could look at it as Australian dollar versus oil, if you want to just simplify it like that. And there was no way that the Australian dollar was going to be a buy up against the Canadian dollar, which is backed heavily by the oil production, U.S. oil production. So we saw a sell trend that was very profitable. So that's one of the reasons why we've seen such profits take place with that asset. And there might be some more taking place. Since we have a new trend, we're going to hold on to it. All right. Now, listen, if we take a look at the charting, if we were to take a look at the charting here, we can see here, let's go ahead and take a look at the charting. So if we look from April, let's see here, April till recent. I'm using this on the cell phone here, so just bear with me. So let's go ahead and let's look for April. We can see. Okay. Here. So April, it was early April, I believe. So that whole section here that we see, let's make it a little smaller. There you go. So you can see definitely a downtrend taking place. All right, we can see the downtrend take place, and we can see even those moments. If we look at the orange, okay, the orange line and even the blue line there, we can see those moments where the up and downs were taking place. We can see the moments where those cycles were taking place. I mean, for the most part, lots of movement in our direction because we chose the sell trend. And sure enough, we were able to make that profit. Okay, so we definitely we chose the sell trend. We can see that here clearly displayed from the time that we placed our trade up until now. Okay, we can see that. Let's make that a little, make that green or something like that. Okay, all right, so we can see that. So but we also notice, if we pay attention and look at this section here with the orange here, between the time of, let's see here, oh, bear with me here, I'm usually used to doing this on the computer. Okay, so here from August up until September 13th, so from August 23rd to around September 13th, we've seen quite a bit of disturbance. This would have constituted as a drawdown phase because it's going against our position. It's actually going in a buy direction when our position was a sell. So between that time period, we definitely seen a loss in our profits. Okay, but overall, generally speaking, especially with emphasis on this red here, this red, emphasis on the red. We have quite a bit of we didn't have any disturbance, even though there was minimum disturbance with the movements. We did have an overall continuation on our current market value direction, which is a sell, which was a sell direction, and still going in the sell direction for now. Now, until we see something else take place, any other changes take place, then we can change that direction. But as of now, there's no significant changes taking place. Now, if there was a serious significant change take place, we would see all of the indicators on our charts tell us, according to the research. But that gives you an idea of how this works. Okay, so now let's go ahead and look at another one here. Let's see. Let's look at one that's more. We'll look at another current market value, but then we're also going to look at some current market movements as well. Okay, so let's see. We have some more current market values here. The ones that are at 20, they're more older. So we don't want to look at a very old one. Let's look at one that's a little bit newer. Okay, here's one that's a little bit more new. So this is an asset that was placed on this account in October. So we're in November. So about a month ago. So this here will give you an idea of a month's time frame and how that correlates to current market value, okay, or even current market movement. But let's go ahead and take a look at it and see exactly what's taking place on the report. So now the thing about it, with those trades that you're going to be placing for a month, they're going to be much more sensitive to current market movement, especially at the early stages. You're going to see a lot of current market movement trades really taking more emphasis on your asset. If you're taking current market value, you usually have to wait at least 2 months before you really break out of that cycle. To be honest with you, you really do. You have to, it's going to take, that's why current market value takes a lot more patience, a lot more time, a lot more resolve. So about 60 days before you really start to see things, go in your favor. You're going to go through a lot of current market movement cycles. Let's put it like that. Okay. So that was Euro versus Canadian dollar. Let's go ahead and take a look at that. All right. So Euro versus Canadian dollar. Let's just kind of look at it. Obviously, we see some new trends taking place, and there's a lot of activities taking place as of recent, because I explained on the previous video that we went over we just completed a total market shift. So we got a lot of assets that simultaneously, large amount of assets, and especially in the Forex market, that simultaneously change direction. So that phenomenon is called a total market shift. Okay, so we just went through that. That's why you got a lot of new trends here. All right, but anyhow, let's take a look and see what's going on here. If we were to compare it to what's going on. So we took the sell position and we were correct. We decided to take a sell position back in October. So, and here we have a buy trend taking place, but we have the sell trend, which is a new trend. So we know there was a lot of turbulence taking place in this asset. But let's take a look at the charts and see exactly what's going on. So we're going to be looking at Euro versus Canadian dollar. And we're going to go back and look at the section for October. So let's go ahead and we're going to go ahead and draw up until now. Here we are. And let's see, it's just September. Oh, okay, September. Oh, my goodness. September, October. There, that's October 4th. That's close enough. So let's take a look and see here. So we definitely see again We can see the disturbance taking place at the bottom here. If we look at that orange section there, the orange, you can see the orange is definitely going against our trend. So, but we also see that if we looked a little closer here, we see the disturbance is much more defined. Okay, so this is really the place where you really want to look. I mean, you want to look at both when we do our research, actually. Let's see, October up until recent. Here we go. All right. So let's see here. So here we go. Okay. So we can see the disturbance. You see all that disturbance in the orange? Multiple disturbances. We have up, we have down, but we seen on October at the beginning of the corner, the top corner represents the beginning here. Okay, the top corner circle. You see, if you look at the bottom here, you can see the date. It says October 5th. Okay, and sure enough, we see the sell trend overall, but there are some disturbances. Now we see our red here is starting to change. Okay. This here, now if we were to, I need to zoom in some more actually. I'll move this. Well, actually, you know what? I'll have to do something else to this chart that I'm unable to do right now. But you can see that this blue line is about to cause that red line to change. Might be a little hard to see. Let's maybe move this out the way. Maybe it's a little bit more clear. But if you see where the blue line intersects the red line, that red line is about to probably change. So we definitely see some movements taking place that are very, very, very much leaning towards a complete change in a new direction for this particular asset, which might actually cause us to maybe change or collect profit. Okay, so let's go back and take a look at it. So we see that obviously there's $93 in profit. This should tell you, when you look at the chart from what I just explained, that should automatically give you an idea of what's taking place from a monetary standpoint now. So that means that this was obviously more than $93. This was somewhere around the hundreds, maybe 140, maybe 150, but now it's down to 93. Now, if this completely changes and it goes to a buy direction, if all of these lines start to move over and we start to have a very strong indicator that that's what's going to take place, and you can also see why that stress is being indicated here. You see that stress, that's another thing I want to explain. Whenever you see a stress mark, pay attention to this. This is very important to understand. That's almost, not even almost, that's the same as saying that you have that going on. So you see that? If we look at this Euro Canadian, we see that the trend is a sell. The position is a sell. Current market value. But the stress will always be opposite. You get that? The stress will always be opposite of the current position that you're in. So you see there's a force. There's an upward force going against your downward position. I used to put that in there with the stress, but it just caused a lot more confusion. I mean, the chart's already kind of cluttered for some people, but that'll just probably cause a little bit more confusion. So let me see if I indicated that on the definition there. The financial asset is undergoing pressure and disturbance, which is volatility, and may or may not change in the new direction. Okay, I should actually put that on there so it'd be more clear. Okay. The stress indicates an opposing force. force against your current force against the current assets force against the current assets position. Okay? All right. So that's very important to understand. So whenever you see a stress, so we got a stress here. Obviously, that means we have a stress here. That means that there's a buy force going against the sell force, the sell position. Here we got a buy going against the sell position. Okay, so that's what it all indicates. Okay, hold on, you guys. I'm going to actually close this video and start on another continuation on this case study.